This is Chris Elliott with the Elliott Real Estate Team and your March 2021 market update. All right, guys, so we're going to start this month's segment out with the final 2021 appreciation numbers. We shared these with you over the last couple of months, but some of these statistical bodies, these research firms, we're still getting their numbers pouring in, and it takes a long time to get that information at a national scale. So as you can see, the three different entities give their three different calculations. Everybody kind of adds things a little bit differently. But as you can see, pretty much average across the board, we saw 10% appreciation across the country at a national scale. That is absolute bananas, with the context in mind that normal appreciation rates are anywhere from 2 to 3% per year. That is the historical average. We saw 10% on a national scale last year, which is absolutely crazy. And I would say depends on the area, depends on the price point, but I wouldn't be surprised in Richmond Metro if we were somewhere around that 7-8% levels. You tend to see the higher end in hotter markets. But anyway, that is that. Lawrence Young put out a very interesting quote that the median homeowner last year gained $24,000 in housing wealth, $24,000 more onto their net worth statement simply by owning a home, just displaying the power and the wealth building ability of home ownership. So thought that was pretty cool. All right, so the story of the month continues to be the story we've had the last couple months. Inventory levels are at scarce levels. If you look at the graphic here, the green line is new listings hitting the market. The orange to red line is the overall listings, overall inventory that's on the market. As you can see, that line just keeps going down and down and down. You can see from the inventory levels, we're down 50% year over year in this past February from February before. So inventory is very, very scarce. Very few homes that are hitting the market. Anything that goes on the market is pretty much getting gobbled up, which is continuing to have prices go up and up and up, which we're seeing across the board. We are currently at 6 months supply of inventory. We're currently at 0.6 months supply of inventory for Metro Richmond. So once again, month supply of inventory, we talk about this every month. 6 months supply of inventory is considered a balanced market. Anything below that is considered a seller's market. We are at 0.6 months supply of inventory, just to give you a little context. So that is why you're seeing homes appreciate. That is why you're seeing multiple offer situations. That's why you're hearing people talk about how crazy the real estate market is, because there's so many buyers that want to buy, want to lock in a very cheap interest rate that we're seeing historic lows. But there's simply no homes to sell them, which is causing prices to continue to rise. On that note, as you can see here, we've got the 2021 house price forecast, pretty much average across the board. Everybody's saying, or on an average, we're expecting to see about 6% appreciation rates. The Mortgage Bankers Association is definitely more bullish at 10%, saying that we'll see that again this year. CoreLogic, always the negative Nelly, is closer to 3%. But pretty much everybody agrees that it is going to be a very good year to be a homeowner. We're going to see record appreciation rates again this year, and prices are going to continue to rise. The other thing on the rise, mortgage interest rates. So as you can see from the graphic, rates kept slipping. They just recently started to climb upward. So basically what economists, what experts are saying is as the economy continues to improve, as the vaccine makes its way and gets circulated, interest rates will be risen just because the economy can afford to eat those higher interest rates as the economy becomes more and more robust. So expect interest rates to continue to tick up by the end of the year. There's disagreements as far as how high they're going to get, but pretty much there's general consensus that interest rates are now going to start to climb. If you haven't refinanced, and that's something that was on your to-do list, definitely recommend getting that done as soon as possible. All right, so for sellers, we talk about it every month. I was writing my notes and decided I'm still not going to shut up about it. Take full advantage of this market. If you put a home on the market, it is absolutely going to sell. You can have a dog turd on the living room carpet and that property will still sell. That's a joke. Don't actually do that. But that being said, your home will sell. The question in this market is really not whether or not a home will sell. It's, are we taking full advantage of the opportunity in front of us? So definitely follow best practices, stage your home, do the things you need to do, capture the highest sales price that you're able to do, take full advantage of the opportunity in front of you. Don't just slap your home on the market and think you were successful just because it sold. unless your goal is to not net as much money as that you want. If you want to do that, just slap it on the market. Definitely do a delayed reviewing of offers. So pretty much on all of our listings, what we're doing now is we are listing our homes on a Thursday or Friday, and we are saying we're not going to review offers until Monday. If you do not do that, you're going to have buyers swarm your house and try to jump in front of everybody else, present you an offer. If you're reviewing offers as they come, you are probably leaving money on the table because you've got somebody that's trying to jump in front of your listing before anybody else does. So definitely consider a delayed reviewing of offers. So that way you're giving enough time for enough people to get through the front door, and you're stacking up multiple offers as opposed to taking the first one that lands in front of you. Another thing that I would consider doing, and this is definitely a case-by-case basis, but on a lot of our properties where we're seeing multiple offers, we're seeing prices get bid up, we are now looking for a cash guarantee on the appraisal. So essentially what that means, just for example's sake, if you've got a $300,000 house that's listed at $300,000, it gets bid up to $325,000. That's great. You know, bring the bell, celebrate, pop the champagne. You wrote a deal at $325,000, but at the end of the day, if that buyer's getting financing, the property has to appraise for $325,000. So what we are seeing buyers offering and what we're trying to negotiate for our clients is, hey, if the property gets bid up above asking price, we want to know how much that buyer is willing to guarantee in cash if the property doesn't appraise. So for example, if they guarantee $5,000, if the appraisal comes in less than the purchase price, then they agree to make up at least $5,000 in cash, and then the rest will be negotiated. So something to think about, and if that's something you want to know more about, we could talk more offline. For buyers, this is not your grandma's real estate market. And I say that with all respect to grandmas. Grandma, if my grandmother is watching this, I love you, I respect you. But know the times that we were in, know the market conditions we were in. I've had several conversations over the last couple of weeks of buyers just thinking that the market is too hot, it's crazy, that it's nuts that we're telling them that they got to offer over asking price, they want to negotiate. And guys, it's whatever folks want to do is perfectly fine, but it's just simply not going to work in the market that we're in. You've got to understand the market conditions that you're up against, the environment that you're in, and the forces that are at play. Second point, it's only going to get more expensive. So we've had a couple buyers recently that have kind of checked themselves out of the process, threw in the towel and said, you know what, the market is too crazy right now, it's too competitive, I'm not going to do this, I'm going to wait until the market calms down, I'm going to wait until it's less competitive. And that is certainly somebody's choice and their right to do that. The thing to understand, if you decide to wait, it's going to cost you. So prices are scheduled to continue to rise and interest rates are scheduled to continue to rise. So even if you wait a year or 2 years till where it's a more calm market, so to speak, that same property is going to be that much more expensive and your financing costs are going to be that much more. So that same property could end up costing you $200, $300, $400, $500 more per month on a mortgage payment, just given the appreciation and given the interest rate climb that we're scheduled to see. And then last but not least, set your sights below the top of your range. So what we are telling our buyer clients is, hey, if you are maxed out, if you do not want to go above $300,000, we probably shouldn't be looking at properties that are priced at $300,000 because they're going to get bid up and you're not really going to have the room in your personal budget to bid that property up and win the bid. You probably want to set your sights on something around $250,000, $275,000. That way you have the room in your personal budget to bid that property up and to do what you're going to need to do to actually win the bid and win that property. So I hope all this makes sense. I know we flew through it. If you have any specific questions or concerns that we did not cover, feel free to contact me via the information on the screen. Thank you guys for tuning in. Look forward to seeing you next month.